I just bought the first ETF for my dividend growth portfolio, and I want to tell you about it. Hi, I'm Dave Van Knapp. Before I get started, please let me just ask that if you like this content, please click the thumb up button, subscribe to our channel, and ring the bell to get notifications about new videos as we post them. Thanks. This is the portfolio that I bought the ETF for. It's called my Dividend Growth Portfolio, and some of you are probably becoming familiar with it now because this is the third or fourth time that I've talked about it in these very videos since I started to record them. The primary goal of the Dividend Growth Portfolio, or I'll call it the DGP, is to produce reliable and growing income over time that can eventually be used to partially fund retirement. The portfolio is real money. It exists at E-Trade. It started in June of 2008, so it's now a little over 13 years old. The starting value was $46.7 thousand, and I've added no new money to the portfolio since I initiated it back in 2008. Its current value is about $163,000. So it's gone up about 249% since I started it. The portfolio has 29 positions, and until the purchase that I'm going to tell you about today, they've all been stocks. The dividend run rate, which is the annual rate at which dividends are flowing into the account right now, is $5,020 a year, which translates to a yield on cost of 10.7%. And I reinvest those dividends monthly, and that's what this video is about. My purchase of the first ETF is my July reinvestment for this video. The DGP's principal goal, as we saw on the previous slide, is to generate income that is reliable and growing. That goal has been met, as you can see on this chart. My income has gone up every year since I started the portfolio, at a compounded rate of about 10.6% per year. For 13 years, the only investments that the DGP ever contained were stocks. Until now. On Tuesday, July 13th, I purchased the first ETF, which stands for Exchange Traded Fund, for the portfolio. An ETF is a fund of companies rather than an individual company, kind of like a ready-made portfolio. From my research into ETFs, about 140 of them involve a dividend-focused strategy in one way or another. But you need to be careful in picking the right ones, just as you must with stocks, to align them with your goals. For my purposes, I identified one ETF that I think stands a little above the others. My winner, and thus the first ETF that I have ever placed in my dividend growth portfolio, is Schwab's U.S. Dividend Equity ETF, ticker symbol SCHD. Here are some things that I like about SCHD and why I chose it as my first ever ETF for my dividend growth portfolio. First, it has a 10-year streak of raising its total dividend payout every year. I know of no ETF that has a longer streak than 10 years at doing that. Second, it has never cut its dividend on an annual basis since it was introduced. SCHD was launched in 2011, and it has raised its annual dividend payout every year since. Third, it has a decent yield of 2.9%. For comparison, the S&P 500 is yielding 1.3% right now. Next, SCHD sports a fast dividend growth rate of 12% per year over the past 5 complete calendar years, ending in 2020. In 2020, the single year, which is its last complete calendar year, it raised its payout by 18%. And finally, the last thing I'll mention that I like about SCHD, it has one of the lowest expense ratios in the industry at just 0.06% per year. Honestly, there's really nothing that I don't like about SCHD for the purposes that I have for it. SCHD, by its own rules, holds around 100 stocks at any given time. This display shows its top 10 holdings, which make up about 41% of its total assets. I've put red check marks next to stocks that I've already owned in my dividend growth portfolio. There are 6 of them. And that shows that SCHD's method and my method of picking stocks have some similarities, but there are also some differences. For example, my portfolio until now, until buying this ETF, has not contained any financial stocks. But there in the top 10 is BlackRock, a fine financial stock that I've looked at many times and just never was able to find at a valuation I liked at a time that I had money to invest. So adding SCHD to my portfolio will help diversify it. This chart shows SCHD's annual dividend payout since it was introduced in 2011. And as I said before, and as you can see on this chart, SCHD's payout has risen every year from the prior year. As you can see at the top of the chart, its last full year in 2020, it raised its dividend by 18% over what it paid out in 2019. And over the last 5 years, the average annual growth rate has been 12% per year, which is very fast. I always try to buy stocks for this portfolio at a fair valuation, if not a cheap price. It's hard to value an ETF because it contains so many stocks, and ultimately the value of the ETF really depends on the value of the stocks that are in it. And it's hard to go through, and I won't go through 100 stocks figuring out their individual valuations and then add them all up. But I have adapted a couple of the methods that I use to value stocks, and this is what I came up with to value an ETF such as SCHD. I see SCHD's fair price as being $70 a share, at which point, and this is another way to look at the valuation of an ETF, at $70 a share, SCHD's yield would be 3.0%. And sometimes that's an easier way to think about valuation. It can also apply to a stock, but certainly an ETF. Namely, what dividend yield do I want to get out of the ETF? And when I get that yield, is that a fair price? So I have a fair yield point for SCHD of 3.0% per year yield. At the right of this chart, I would say don't pay over $77 a share, which would be a 2.7% yield or less. And at the far left of this chart, I would say that a really good discount on SCHD would be a price of $63 a share, at which point it would yield 3.3%. Right now it's selling for around $75.84 or $76, which I put at the upper edge of the fair value range, which I always consider to be 10% either way wide of the exact fair price that I set. So I set the fair price here at $70. The deep discount price is 10% less than that, $63. And the don't pay over price is 10% more than that, or $77. This slide summarizes what I did when I added SCHD to my portfolio. Again, I was using dividends that accumulated between my last reinvestment, which was in the middle of June, and this reinvestment, which was on July 13th. That enabled me to buy 6 shares of SCHD. It's a new position in the portfolio. Total cost was $455. And by adding those shares to the portfolio, I kick up my annual dividend run rate in the portfolio by $13 a year. Here is the impact on my portfolio's income from this purchase. It went up $13 per year, as we saw on a previous slide, which takes it from $5,007 a year to $5,020 a year. That increase of $13 a year is small on its own. It's about 0.3%. But as I say each month when I make these videos, these little investments add up over time. In fact, since 2008, making reinvestments just like this one, I have reinvested more than $38,000 in dividends, and they all look pretty much like this one. And if you recall that the starting value of the portfolio was $47,000 and change, I'm starting to get close to having reinvested dividends that are equal in value to the original amount of money that I put into the portfolio in the first place. What happens is they all add to compounding. Those 6 shares of SCHD added $13 to the dividend stream. That's $13 that wasn't there before, and that contributes to the chart we saw earlier, the green bar chart, where the income went up each year at a compound annual growth rate of about 10.6% per year. These dividend reinvestments happen on top of the dividend increases coming from the stocks and now the ETF themselves, and they help accumulate a snowball effect, making the dividend stream larger and larger every year. This is the updated chart of my dividend reinvestment activities this year. I highlighted in yellow the purchase that we're talking about in this video. For July, I added 6 shares of SCHD. It's a new position, and it adds $13 to the dividend run rate of the whole portfolio. If you look at the bottom, now through dividend reinvestments this year, I've added $156 to the annual dividend run rate, and that's added a little over 3% so far to the annual dividend run rate now compared to what it was at the beginning of the year. So you can see how that contributes to the 10.6% overall dividend increase rate for the entire life of the portfolio. And that's about the end of the story for this month. SCHD is not the highest yielding ETF out there, but its combination of high quality, unbroken dividend growth streak, and consistent performance across many market conditions in the past 10 years make it very attractive to me. I intend to add to it over time when its shares are fairly priced. And that's the end of this video. I'll be back in about a week with my dividend growth stock of the month for August, and then a few days after that with my end of July report on the portfolio that we've been talking about. Thanks for watching, everybody. Bye.